Welcome back, everyone. It is a Friday night. I got a little bit of time to myself, and I said, hey, I'm going to do a video. Yes, get a life, John. But you know what? I've been thinking about this all day, all week, and I wanted to share a couple tidbits with you tonight. Hey, look, thank you for coming and watching my videos. Look at that, 200 subscriptions. Hey, for me, that's a big deal. As you know, if you've been watching my videos, I am 100% in this to show somebody out there, yes, you, somebody out there, something that you can work with, you can learn from, get motivated to do this. You know, I talked to 3 people this week, and I asked them, why don't you do this strategy? Why don't you get your financial education and do this strategy? And the first thing they say, and it's disappointing, is that it's just over my head. So, you know, I'm going to suggest that you watch these videos on YouTube. You watch them once, you watch them twice. You try to get that little morsel of information, and you build off of it. We have building blocks of information to get us where we need to be. Okay? And I hope watching my videos you get something from it. Now, hey, look, thank you for subscribing and bang that like button right there. Let me know you like what I'm doing. And hey, leave me a comment. Love it when you cats leave me a comment. Okay? Love answering those questions. Hey, look, let's talk about a couple things. We want to talk about greed. We're going to talk about my swing covered call trade. And we're going to talk about how I dealt with Disney. Yes, if you remember, I bought Disney almost 13 months ago. Bought it at 107. Thought that it would rocket back to 125 after the first Star Wars movie. It did not. It fell down into the low 90s. I think it even hit the high 80s. And I was stuck. I used covered calls to lower my cost basis to the point where I was able to lower my cost basis down to about $100 from 107 down to about $100. And I wrote my final covered call it was a February 17th covered call, 105 covered call, got paid $1 for that. I'm going to show you how that trade ended up. But first, let's talk a little bit about greed. Greedy. Sometimes it's good. Sometimes it's bad. In this case, check this out. Heinz Craft. You know I love Heinz Craft. I've written many covered calls on Heinz Craft. My last trade, pocketed like 4 G's on Heinz Craft. Did like 5-6 covered calls. Love it. Trades in a range. It's easy for me to use Heinz Craft because it pays a good dividend. It's a great company. And quite frankly, the volatility is just enough to keep those premiums where we want them. Check this out. No lie. I put in a buy order right there, a limit buy order for Heinz Craft. Think it was 86.08. 1 penny above the market price. Got greedy. Did not take me out. Look what happened. As it inched higher throughout the day, knew I would miss it, but thought I could get maybe $1 or $2 down the next day. Just the way Heinz Craft does after earnings. Negative, pal. They wake up this morning. We wake up this morning finding out they want to strike a deal with Unilever. That is a 9-point gain. I was going to buy 300 shares. That is a $2,700 missed opportunity, literally in a day. So, yes, I love limit orders. Boy, I love limit orders. But, man, if you want the stock, just go for it. Go grab it and take it. I got a little too fancy there. Got stuck. Got stung. Let's talk about Bristol Myers now. So, Bristol Myers is my quote-unquote swing covered call trade. You know, I've talked about how I've tried to swing trade over the years, make some money, lose some money, most of the time losing money. I like swing covered call trades. And what does that mean? Well, what it means is I'm going to buy the stock at a good price for what I think it's going to be. And then I like to write the out of the money strike. Whatever that out of the money strike is, I like to collect the 2 to 3%. And to me, it's just a swing trade. But it's wrapped in a covered call. Meaning, I buy the shares, I write the out of money strike. To me, I hold the stock because I have to. I wrote the call. And I'm hoping to get that nice little swing trade. And in this case, Bristol Myers gave me that nice 3% swing trade. About 3 weeks ago, I bought it at $50. I wrote the 51, got 50 cents for it. Money in the bank, 3% if my shares are taken away. Sure enough, they were taken away on that Friday. I let them take them away. In fact, I was at lunch and I had a decision to make, either to buy it back or take it away. I said, I'm going to let it go. Let it go. Not a problem. Well, that next day, it wasn't a problem until the Tuesday when all of a sudden Bristol Myers becomes a takeover target. Stock rockets, literally $2.50, I think. Well, I felt like I had missed an opportunity. So what did I do? I put in a nice little limit order here, right here. Went ahead and wrote. What did I wrote? I think I wrote a 1 month 57.50. I wrote that call option into all of the positive news, the positive stock market. Got a nice 85-cent premium for a 57.50. The stock's sitting at 53.50. I think it's 53.50 when I bought it. Hey, that's going to be an 8% swing covered call for me if my shares are taken away at 57.50. And of course, if they're not and Bristol tails off because the rumors are just that, rumors, that's fine. I'll buy it back when that 85-cent premium gets under 10 cents, and then we'll write another covered call on Bristol Myers. So that's a nice little swing covered call idea. That's what I do. I love it. Real quick, let's talk about Disney. How did I deal with my Disney trade? Well, like I said, I wrote a 105. Okay? Wrote a 105 for a February 17th. Okay? As you can see, right here in December, Disney catches some wind behind its sails. It's going higher. I know it's going to go higher, but I got 105. Now remember, I was in the hole, baby. I was feeling it. In the hole. I was able to reduce my cost basis from 107 down to 100. 100. So when I write this final covered call, I'm thinking, man, I pick up $5 a share. I picked up $1 in premium. That is a $6 profit, right? $6 profit. I'm going to go ahead and write that covered call, knowing my shares are going to be taken away. Sure enough, Disney gets up to 110. And what ends up happening here, and this is just a little bit of info for you salty dogs, you want to get better. There was a certain point when Disney was 110, okay? My option that I got paid $1 for back here, it was trading for $5.05. There was $5 in real money. So, you negate, I'm gonna buy this option back for $5.05. I'm going to then immediately sell the shares, realizing the $5. So the fives get crossed here. The fives get crossed. What am I left with? I'm left with paying 5 cents. Remember, I got paid $1.05 over here. We scratch that 5. I still keep $1 plus my $5. Ends up Disney turns out to be a very green trade when in fact, when it was in the high 80s and, people are talking about selling it. 13 months later, yes, this turns out to be about a 7% trade. Not what I wanted, but still 7%, I'll take it every time. Hey, look, I hope you learned something from this video. I want you to come back tomorrow. I plan to do a poor man's covered call video. I have done a lot of studying. And I have answered a lot of questions through my research that I think you're going to be interested in. A lot of the questions, those videos that you see on YouTube don't answer. And I'm going to talk to you straight talk about the risk and rewards of doing a poor man's covered call. But hey, look, before I leave you, I'm here to give you motivation, because part of this, and I told you in many of my videos, motivation, inspiration, and experience gets us to where we need to be. And a large part of that is motivation. I know people that just don't get motivated enough. They don't do it. And when they don't do it, they get down on themselves, and it's just a bad deal. So I'm here to motivate you. I hope you learned something. I hope I motivate you. Here's my numbers. It is February 17th. So this is not even a 2-month total. Remember, my modest goals for 2017 was $24,000. Look where we're at with that. So it is, as of right now, again, God willing, I always say it, it is starting out to be a good year. Hey, look, again, I hope you learned something, and I hope you hit that subscribe button. I don't know how you found me, but I'm happy you're here. And hit that like button. Hey, leave me a comment as well. So until next time, which will be tomorrow, I hope all your covered calls are profitable.
All I see is signs, all I see is dollar signs. Oh, money on my mind, money on my mind.